So we knew the topic, if we use the word AI, we'd get some of you in early this morning, so it's great to see you all. You heard I'm Melissa Koide. We're going to do a very fast, deep dive to the extent that we can, but also an overview of what's happening in the landscape of more advanced analytics, various forms of artificial intelligence, and its use and possibilities in the world of financial services, ultimately for the benefit of people. Whether those are small businesses or consumers, households. So we're going to jump in right away. I run FinRegLab. We're a DC-based research organization. Look us up. I think we're doing some of the really important public-facing research to ultimately help inform market practices in the policy community, who themselves are really trying to understand how do we get the laws and regulations right so that we get the benefits of the advanced analytics, but also make sure the broader world is able to participate in financial services safely and responsibly. I'm going to let my colleagues who are joining me this morning, we've got representation from the investor community. Tahira, Dean, you're coming from KeyBank. You're thinking about how to deploy this in the financial institution. And Kareem, you've been really leading some of the work to think about how do we use AI in ways that are inclusive and fair. Dean, why don't you start by doing a quick introduction of yourself, and then we'll jump in.
Fantastic. First of all, first time here. Thrilled to be here. I've enjoyed the conversation. KeyBank's a sponsor and been a member 19 years, so very much part of our vision. So Dean Kontul, I'm Division CIO at KeyBank, one of four. I'm responsible for some operations as well, which is a good thing. Get to test out my technology and see how it works. So I run contact center, capital markets, and wealth operations, but I'm responsible for what we call intelligent automation, which is low-code RPA and internal CRM and artificial intelligence, both conversational AI and Gen AI.
Thank you, Melissa, and thank you, everyone, for being here this morning. I'm Tahira Dosani. I'm the co-founder and managing partner of ResilienceVC. We are an early-stage venture fund focused on investing in fintech models that build financial resilience for American consumers and small businesses. And so as we invest at that intersection of technology and financial services, we have seen AI today, but previously many new technologies and trends that really have potential to transform the way that financial services can be delivered to populations that historically haven't been well served.
Morning, everybody. Good morning, everybody. I'm Kareem Saleh. I'm the founder and CEO of FairPlay. We cheekily refer to ourselves as the world's first fairness as a service company. We allow anybody using an algorithm to make a high-stakes decision about someone's life to de-bias their digital decisions in real time. Thanks to Jen Tesher and FHN for having me.
Wonderful. So a couple things that I just want to say that I think you're going to hear thematically throughout. One, most of us realize that automation and forms of machine learning, supervised machine learning, have been used in the financial sector for actually at least a decade, probably longer, in a variety of use cases, but also in some of the highest risk but highest reward use cases like credit underwriting. We're now at a stage where we're looking at non-deterministic large language models, Gen AI, and I think it's important for all of us as experts in financial services to continue to be clear about the distinction between those two, or those variety of artificial intelligence approaches. Financial services, the second point, is a highly regulated sector, including the non-banks. And laws, especially in some of these high-risk use cases, require that lenders, for instance, in credit, have to generate explanations for how the models are deriving their outcomes. And the banks and the fintechs in the world, many of them are very careful about how they understand or generate explanations for how the models work, whether it's a logit regression or an XGBoost model. And then the third point is, and I think we all realize this too, data is so critical. What the models, no matter what type of model you're using, the models themselves are dependent upon the data that they're being fed. And to the extent that the data are not representative of populations that you're trying to evaluate, you're going to get a miss. You're going to get bias. You're going to get unfair outcomes. And so just keep those things in mind as we dig into both, I think, the excitement and a lot of anxiety that many of us feel about some of these newer AI developments, but also, how we are operating in a financial sector that means you really have to understand and use these models, whatever type, very safely. So I'm going to kick it off. I'd love to hear from each of you. Where are you enthusiastic about where artificial intelligence may lead in terms of especially consumers and their financial health and opportunities for bringing more people into responsible financial services? And I forgot which one of you were supposed to go first.
I was, and I'm happy to start. So, as an investor, we see a lot of startups, fintech startups, that are leveraging AI. Some are doing it, almost all are doing it in some way on the back end, and then many also are starting to think about how to roll that out on the front end to be more directly consumer facing. And on the back end, it's interesting, I was talking to a founder yesterday, and I asked if they were using Gen AI, and he looked at me and said, well, it would be irresponsible of us not to. And he's right, because Gen AI has the potential to be incredibly operationally effective, to help companies streamline in so many ways. Many of the startups that we see their developers are leveraging Gen AI to write code faster. Their marketing teams are leveraging Gen AI to generate copy that's personalized and relevant to each marketing platform. Being able to use AI in those ways and others on the back end, including things like compliance, risk and fraud management, data analytics, et cetera, allow companies to bring down their operating costs. And in order to serve the customers that we care about, companies need to lower their cost to acquire and their cost to serve those customers. And so bringing those costs down by leveraging AI on the back end is really critical. We're also starting to see companies that are leveraging AI on the front end to better engage with and serve their customers, to help work with their vendors, and to really find better ways for them to deliver personalized financial recommendations to their customers. A lot of those use cases are still early. The technology does have some challenges that it needs to overcome there, but we're really excited about the potential on both the back end and the front end side.
Would you all like to share what you're enthused about, where you see it,
Yeah,
where you see
I
it
certainly
going?
can go. So first of all, I do think that the explosion of Gen AI has increased awareness of all AI, and it is important to discern because Gen AI comes with a unique set of risks that need to be managed. But I think we're excited, first, about getting it right. We're in a highly regulated industry. We have to protect our clients' data. We have to secure that data, and we have to use it in a fair and equitable way when we build our solutions. I think this is the year for banks where we're moving off of, for Gen AI specifically, been using traditional machine learning for several years. But this is the year where we're getting off of PowerPoint and into production in some way, shape, or form. So as shared, developer productivity, Office 365. But what I'm most excited about is that we're building in partnership with a major cloud provider, no free advertising today. We're building our own RAG architecture so that we can use more sensitive data in a controlled way, and we can protect it from a security vulnerability, and we can test our own data for bias as we use it to expand for our clients and help people with financial wellness.
We didn't prepare for this, but this is definitely something that is hitting the scene in terms of having more confidence in models where we're worried about hallucination. Can you say 2 sentences about the RAG architecture?
Yeah, so it's a retrieval augmented generation. So it's a way that you control the data set that goes into the model and specifically what comes out of the model, and then you test for validity of the answers and confidence intervals so that you can use them. Our first use case will be for summarization of policies and procedures. So I run the contact center, but even in our branches, one of the biggest challenges is client calls. Employee's been with the bank 7 months. We have 5,000 procedures. And we want to give an answer with confidence. And we spend so much time searching. Semantic search gives you a list. As you guys know, when you use the GPTs, it's not always accurate, but it's very quick and it's very summarized. With RAG, we can make sure that it is the right answer quickly, and it's in a language that the employee can understand, and give the right answer to the client, and also evidence of what the procedure is. So it's traceable. We can go back and make sure it works.
So this is the way in which we're beginning to push on much more complex black box algorithms to have some level of confidence that what they're producing is.
Absolutely.
Yeah, and there's a human and a process.
Correct.
And
Human in the loop is a big point. And most of what we're looking at our bank and most banks is middle to back office, nothing directly interfacing with the client right now.
because you're learning right now.
Yes.
Kareem, how about you? What are you enthused about with respect to AI at large?
I mean, so many things, right? We'll talk about algorithmic fairness in a bit, but just imagine for a moment that each of us had a little AI angel on our shoulders with an IQ of 140, constantly guiding us to be our best selves, right? Our best physical selves, our best emotional selves, our best financial health. These are the emergence of these AI agents that are highly capable is extremely exciting. In lending, we see opportunities for AI to increase approval rates for protected groups on the order of 10%, improve pricing for protected groups on the order of 13%. All of that is good for profits, good for people, and good for progress. The problem, of course, is that machine learning systems are capable of learning the wrong things. And just to give you a simple example, we as the AI developers may think that we are giving inputs which are neutral and objective to these AI systems. But it turns out that neutrality is a fallacy and objectivity in this world is a myth. And let me tell you just a very quick little story.
Because that's humans, right?
Yeah, right. So imagine for a moment that we were trying to build an algorithm to predict the sex of an individual. In financial services, this is a terrible idea, but just humor me for a minute, right? And so let's imagine that as an input to that algorithm, I was giving you a person's height. Well, height is somewhat predictive of the sex of an individual because men tend to be taller than women. Of course, you've got Melissas in the world.
6 foot.
Right, yeah, right.
Without heels.
And you've got some short men in the world. Where are my short kings at? Right, so a model that seeks to predict sex on the basis of height will be imperfect, right? So let's say, okay, well, what about if in addition to height, I gave you the weight of an individual? Well, weight adds incremental predictive power because even at the same height, men tend to be heavier than women due to things like testosterone and bone muscle density. Of course, the problem with an algorithm that seeks to predict sex on the basis of height and weight is that it will classify every child as a woman, right? Okay, so what if I told you, all right, I'm going to give you, in addition to height and weight, birth date to control for the fact that there are children in the world. Now our system of predicting sex is actually pretty good. But if I had told you a moment ago that birth date was predictive of sex, you would have told me I was crazy. And fundamentally, that's the challenge that we face with these AI systems, is that we have these inputs that appear to us to be neutral and objective, but which actually interact in the algorithms in ways that encode information, potentially about protected status and other sensitive attributes that no human could possibly discern. So tremendous power, really excited about the future, but we really got to get this right.
Great. That's really a great example to help understand, frankly, just how important the combination of the human and the data, but the human understanding the data, but where the human may not. But also importantly, and this shows up a lot in credit underwriting, correlations in the data, and really trying to discern and make sense of what you get and what the model then spits out. So let's dig in a little bit on vulnerable populations and what you all each see in terms of where AI might be especially effective. And we've got a lot of both banks, fintechs, and nonprofit organizations in the room. What are you all seeing in terms of how AI can be deployed in ways that are useful ultimately for vulnerable populations? Do you want to kick us off, Dean?
Yeah, certainly. So Key is a 200-year-old bank. Almost 200 years, I think, next year, right? colleagues on the front table, stretch from Maine to Alaska, and so the vulnerable populations are a part of our client base without a doubt. Our purpose is to help communities and our clients thrive, and so we're very focused on delivering to all these populations in our business model. I think a couple of things. First, data is foundational to AI. What I'm excited about is some of this non-traditional data. Rent payments, we've heard about it in the conference, rent payments, car payments, utility bills being collected and available from data service providers. And then banks have a ton of data about our clients' transactional history that we can use with models to better understand their creditworthiness, help them with their financial planning. Every one of our clients goes through a financial review where we understand their goals and what they're trying to accomplish, whether they're saving for rent or saving for their first car to put their first child through college, trying to buy a house. And I think in the future, not generative so much now, but I think it'll get there where we will have, similar to what he said, a financial advisor that's available, cheap and effective for all of our clients. And I think in some cases, the underbanked or some populations are concerned about approaching a traditional financial service company. So whether a bank delivers it, a startup delivers it, this financial advice that will build acumen and it'll meet them where they are, I think is going to be tremendous in terms of helping with financial literacy, financial planning, and then when you have real-time transactional capabilities, monitoring for things like fraudulent activity on their behalf, because the less money you have, the less you can afford to lose, obviously, and also with their plans to make sure that they're on track. So I think AI has a brilliant future in serving the financial wealth of the economically disadvantaged, and everybody knows what that population is.
As an institution, do you see the efficiencies of the automation, of the sophistication of the models with, appropriate and rich data, ultimately helping to, in time, bring down the cost of serving with a variety of products and services?
Yeah, I think as an old channel guy, we always have this belief that you're going to offer a channel to a client and then you're going to lower cost in another channel. What you get is a channel arms race. But we are seeing, one of the things we deploy is conversational AI for our clients, and we're seeing them stay in the digital property longer, find the information they're looking for, and then when they want to talk to a human, we don't make that hard. We connect that chat directly with a human in the contact center. That whole experience is better for our client, and it lowers cost, and it allows us to invest more. So I do think finally this technology is coming about to where it will drive cost out. And as she said, I think that allows us to invest in more capabilities, more products, more services, better pricing models for our clients. I do think that's a real possibility.
Kareem, do you want to weigh in?
Yeah. What was the question again? Oh, right. Yeah. What I remember.
Vulnerable populations and,
Yeah.
and what should organizations themselves be thinking about?
So listen, I think one of the most exciting things that's happening in AI now that has the potential to improve outcomes for vulnerable populations is this idea of multi-objective optimization. And let me explain what I mean by that. Every algorithm must be given a target, a kind of objective that it seeks to relentlessly maximize. So if you think about like the Facebook algorithm, its objective is to keep the user engaged, right? So it's going to do whatever it needs to do to get you to click, regardless of whether or not it's showing you content that's good for your mental health or good for society. You didn't tell it to care about those things, right? You just told it to care about keeping the user engaged. And if you think about it for a second, it's easy to foresee how giving an algorithm one single-minded objective might result in all kinds of undesirable outcomes, right? Like imagine if Tesla gave the neural networks that power its self-driving cars the mere objective of getting a passenger from point A to point B. Well, the self-driving car might do that while driving the wrong way down a one-way street, or causing mayhem to pedestrians, or blowing through red lights, right? So what does Tesla have to do? It has to give the neural network that powers its self-driving cars two objectives. Get the passenger from point A to point B while also respecting the rules of the road. And so this ability to integrate public policy considerations into the algorithmic objectives can be done across a bunch of domains, including in financial services, right? Predict who's going to pay back a loan while also minimizing disparities for protected groups. So I think we are headed for a future in which these AI systems are not told just to prioritize accuracy, profitability, engagement, but these other considerations that, as a public policy matter, we all ought to care very deeply about.
And, I'll maybe pick up on the question you just asked, Melissa, on the cost side. I mean, the reason that certain segments of the population have remained underserved and remain vulnerable is because it hasn't been profitable to serve them. And so cost matters, right? It absolutely matters. We need to be able to lower our costs to acquire and serve those customers. Part of the reason those groups tend to be more expensive to serve and less profitable to serve is because they haven't been included in the system, and so they require higher touch at various points in the customer journey, often around acquisition and onboarding. And then they tend to generate less revenue because they have lower balances, fewer and smaller transactions, et cetera. And so there are many ways that I think Gen AI has the potential to address both the cost and the engagement and ultimately revenue pieces of that equation. A big element when we're talking about these underserved populations is building trust. And with Gen AI, there is incredible potential to leverage their own data. Now we have to make sure that the data sets that are being used to train the algorithms are relevant to those populations. We have to make sure that their data is held with privacy and security, because once that trust is lost, it's so hard to regain. But there's so much potential. One of our portfolio companies, has started. They started using Gen AI to help, as they were providing a service to a customer, provide context on what exactly goes into that number that a customer is getting back. And they built the tool, and right now their customer service staff see the output, and then if a customer calls in, their internal team gets to use that, the output of those algorithms and that data generation and communicate that with the customer. That's how they're building and testing this technology. Their goal is, within a quarter, to actually roll it out directly to the customer in the app, where the customer sees that output directly, not intermediated by a customer service representative, but building it, using it and testing it internally, making sure it works, making sure there aren't errors, and then ultimately rolling it out to be customer-facing. Doing things like that in that incremental way, as you mentioned, Dean, you're building it internally first, and then you're going to roll it out to the customer. Things like that become so critical to ensure that that trust can be maintained when it comes to these populations.
It's really helpful, and we're all putting our fingers on the point around the importance of the data, and also the importance of, and we could have a day-long session about data and accessing it appropriately and with consumer consent and back-end consumer protections, but even the engagement that is happening right now with all of us humans and our institutions, our providers, vis-a-vis the mobile device, is creating useful information to ultimately improve what's the interaction, what's the function that an AI tool could enable. So yeah, it's interesting to think about how we get that right as we go forward, because it is so important. So we only have about 7 minutes left, and one of the really critical topics is, how is this technology, again, whatever model type we're talking about, but how is it being used inclusively and fairly, especially in high-risk use cases like credit underwriting? And I know you all, whether you're investing or you're a lender yourself, or you're, providing services to help lenders themselves and others figure this out. How are you approaching this? Kareem, why don't we start with you, because I know you all have really built a brand and a product around fairness in artificial intelligence.
Yeah, so fundamentally, if you're going to be using an algorithm to make a high-stakes decision about someone's life, there's like 5 core questions you should be asking, right? Like, is the data I'm using to make these decisions fair? right? Is it representative? Are there high rates of missingness? Does it include proxies for sensitive attributes, right? Are the outcomes of my algorithmic decisions fair? So like, at what rate are women experiencing a positive outcome relative to men? Are there differences in outcomes for black consumers relative to white consumers? And if they are they statistically significant? Second is like, do I really understand, how this algorithm is making decisions? Once upon a time, I mean, I just tell you like, another quick story. Like when I started out doing this work, applying kind of complex machine learning algorithms to consumer credit underwriting about a decade ago, we didn't have a data set. And you've heard this story. We didn't have a data set. We faced a cold start problem. And so we went and we acquired, which is like the kind of the aftermath of the financial crisis, we went and we acquired a data set from a failed lender. And we trained up our algorithm we're making an algorithm to underwrite consumer installment loans. And we trained the algorithm. The algorithm came back and was like, you should make loans in Arkansas. Interesting. Well, it just so happens to be that my co-founder is from Arkansas, and he happened to know that the regulatory regime in Arkansas was extremely hostile to these kinds of loans. So we started like digging into like, why does the algorithm think we should make loans in Arkansas? Well, it turns out that the data set that we got didn't include any loans from Arkansas, which meant that the data set didn't have any defaulted loans in Arkansas, which led the algorithm to conclude that loans never went bad in Arkansas, right? And so it's like, do you really understand how this algorithm is making its decisions, what variables it's taking into account, and to what extent? And even if you do, go back to that first question, like, are the outcomes reasonable? And even if they appear to be reasonable, could they be more reasonable? Could they be fairer within your risk tolerance? And finally, I think the question we should all be asking is, the folks who are rejected by these algorithms, the people who experience adverse effects from these algorithms, maybe we should give them all a second look. Maybe we should double check the decisions of that system to make sure that we didn't deny somebody an opportunity that they rightfully deserved. So I think you don't actually have to be an AI expert to be able to ask these basic kinds of questions, right? Like, are my decisions fair? If not, why not? Could I be fairer? Did I give the folks I rejected a second look?
Excellent. Dean?
Yeah, I'll just build on that and say initially, again, machine learning, traditional AI has been in banking 20, 30 years, been around 50 years, AI. As we move into the Gen AI, it's very important that we do have that human in the loop. It's also very important that many FIs can't afford to build a foundational model of their own, right? So there's a couple banks, you can count one or two that are building a large language model. So what we're going to be doing is waiting for the providers to build fine-tuned models for financial services. If it's fine-tuned for financial services, it'll, by its very nature, have some better data quality, and then we can put our data into a fine-tuned model for some of the more risky decisions. It's incumbent on banks and fintechs to make sure that we get data privacy, data security right as we do it. I think Einstein said something about, can't solve your problems with the same thinking that created them. So we have to get this right for all the reasons that we've discussed. Banks are going to be a bit slower. 300 pieces of legislation at the state, local, federal level coming. It's not all been written, and so we're going to have to make sure we get it right. One of my biggest fears is that a bank will do this more loosely than they should, and it'll set the industry back, because I think what you're hearing here today is there's real value in the power of this moving forward for the economically disadvantaged, that constant financial advice in my language that I understand to lift me up. And if we don't do this right, I think it'll set the industry back. It'll set us back from lowering cost, which can lead into better investment, or we'll do something wrong here. So we've got to be careful about that.
That's really great. Tahira?
Yeah, I'll quickly just add that, in addition to the fairness element and the data security, privacy element, the transparency element is so critical. Consumers need to understand what data is being captured on them and how that data is being used. And that goes back to the trust piece that I mentioned earlier, but it also, does feed directly into the data security privacy space, and I think where regulation will ultimately force organizations to go. And Melissa, I mean, you're deep in that world, and I think, providing a lot of insight to regulators around how to think about, regulate, and approach this space. But regulation will ultimately drive parameters here. I think the best fintechs, financial institutions, are going to be the ones that get ahead of that regulation, that really take a consumer protection lens to this and keep the customer front and center.
Yeah, and I'll offer 2 points here too. I think there is a general understanding. There are a lot of anecdotes. I mean, FinRegLab has done research in the space around inclusion from the data, explainability. What we're seeing now in the broader industry is banks as well as non-banks. I mean, the non-banks have been pretty vocal about the possibilities. But I think there is a recognition that, yes, the regulators come in close when they're doing examinations, but there needs to be more of a shared community in terms of how are these techniques, how is the human oversight, how is the compliance process really engaging, and actually to show your math. And so we're a part of a working group that the OCC has just stood up that is bringing banks and the non-banks together to really create a framework around ultimately how do you use. Now, this is supervised machine learning, this isn't Gen AI, and it's an important distinction to make, but I think the community at large is saying, we got to come together, we have to be able to talk and actually show how are we doing it, so that ultimately, the long tail of the financial industry can also be taking part in this. They can be leveraging partners and vendors to do it. But then also the regulators themselves get to look and ask questions and learn. And it's exciting that we're at this point where I think industry, nonprofits, the consumer advocacy community is really coming to the table and saying, let's put words on the page so that we all understand this better. So that's just in one space of AI. I mean, the other range of applications are so vast and so exciting and also frightening how we're going to get it right. So hopefully we'll be back next year. I know we're out of time, to talk about what's come about of all these initiatives and how are we all using these tools in our back pocket. So please join me in thanking the panelists.